And let me close that so that nobody. Okay, welcome everybody out there in YouTube land. My name is Alethea. We're back again for another Sunday evening trading basics session. And today I'm going to be covering risk management. It was a request. The person that requested is not here, but the great thing is these sessions are live streamed to YouTube, so anybody can go back and watch at their convenience. So please subscribe to my YouTube, Rain on the Charts, like, subscribe, comment, and share my videos. And as we're going to be talking about risk management, you know, trading is something that, yes, you need skill. Yeah, you do need skill, but to be a profitable trader, it's not necessarily about the skills that you have. It's more about the patience and discipline. And anybody who has been in my hemisphere for a while know that I'm always talking about Trading in the Zone by Mark Douglas. So, you know, I went ahead and made it easy. I have a link to it in my description box. So anybody that needs that book, you can go ahead and get it there. Go ahead, no problem. You can go ahead and get that book right there. All right, I need to get rid of these things. Even though I have my phone on do not disturb, certain notifications just come through anyway. All right, so let's get started here. Let me open up a new thing. All right, so I'm gonna go ahead and start sharing my screen. Bernie, can I make you a co-host so that if and when anybody else comes, okay. All right. Thank you. Not sure what's happening. Co-host. Thank you. All right. All right. So let me go ahead and start sharing. Okay. So risk management. When trading, I tell people to not risk too much. And I'm just going to make it simple. I'm going to go over the compound calculator as to why you don't want to be going crazy. Trading involves risk. You can't win all your trades. You're going to win some, you're going to lose some. So risk management, you know, that's that thing that's going to have you just remain profitable throughout the process. So I recommend 1, 2, or 3%. And this is because that's what was recommended to me. I'm just going by what was taught to me. So I'm just sharing that with you. So anybody that's new, I would say risk 1% of your account. Anyone that's really conservative, risk 1% of your account. 2% if you're a moderate trader, and 3% if you are that aggressive type trader. Okay. And Bernie, I know you've heard this a few times already, but hey, it doesn't hurt to hear the info again, right? So you want to have a goal when you're sitting down to trade. You need to know, how much do I want to grow my account today? And as well as that question, the next question is, how much am I willing to lose? Because remember, you have to lose some. So let's say the goal is 2%. If your goal is to grow your account 2% in a day, maybe you don't even want to risk 1%. Maybe you want to risk 0.5% or a quarter, you know? But say you want to grow your account 2%. As a new trader, you should be happy with 2%. If you have a checking or savings account, you would be over the moon if you could grow your money 2% in a year. They're giving you less than 1%, like 0.0025, some crazy number like that. So 2% is a great goal as a new person. As you progress, you can up it. 2 to 5% growth is not bad at all, right? So let's say you want to grow your account 2% per day. So you're going to start with $5,000. Right? We're not including the weekends because the foreign exchange market is not open on the weekends. And I want to say hi to Miss Haley and Miss Shauna. Thank you guys for being here. Right? So just growing that money 2% a day can eventually do some things for you. Because if you look at these different prop firms where you have the opportunity to have access to large sums of money to trade, they're saying to grow the account between 8 to 10% in a month. So if you can grow your account 2% a day, that's way more than the 8 or 10% in a month that these prop firms require. So why be greedy? If they want to see experts come, and in being an expert, they're anticipating that type of growth, why do you think as a novice, you should be surpassing that, doing 10% in a day, when they're looking for people to grow an account 10% in a month? Does that make sense? I want to see some threes in the chat to see if what I'm saying is making sense, because we have to treat this thing like a business. We don't want to treat it like it's some get rich quick scheme, like, oh yeah, I'm just going to grow this money. No, we don't want to treat it that way. Okay. Thank you, Bernie. Right? Welcome to the call, Dolphin. Right? So let's see what growing it 2% will look like. So the first day you need to make $100, right? Some people don't even make $100 in a day. 2%, right? So the goal is to grow it 2%. So you also need to know how much you're willing to lose in a day. So if the goal is $100, maybe the next thing is I'm willing to risk $25. That's the most I'm willing to lose. Or $50, that's the most I'm willing to lose. You need to know your parameters and stay within it. Do not go outside. And that's why, again, I'm recommending trading in the zone, because it will be difficult. It's more a mind game than anything to do with the skill set. You can learn the skill set easily. So trading in the zone, again, the link is in my description box. Get it if you haven't already purchased it. Okay. All right. So $100 day one. So now you have $5,100. Day two, you still need to grow the account 2%. 2% of 5,100 now is $102. So the way compound interest works is you're going to be getting interest on top of the interest as time goes by. We have people plugging in. Okay, that's nice. So by day 30, by a month in, you're making $177.58. Now you have almost $10,000. You have $9,000. Mute, 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 mute. Welcome to the call, Nini. So by day 30, you have over $9,000. You're still growing your account just 2%, right? So don't think about the dollar amount. Think about the percentage that you're able to grow your money. So as you get more seasoned, you can now raise it up from 2% to say, okay, I want to grow my money up to 5% a day. You know, as you starting to really understand, you're able to really navigate better. You know, you're able to do the trailing stop loss. That's a video that you want to check out. I did that last week. You want to go check that out. And that's going to help you so you can aim higher if it's a buy, lower if it's a sell, and just keep moving your stop loss up or down, depending on if you're going long or short. If you don't know what I mean by long or short, I also have a video for that if you want to check that out. Okay. So 5%, say we were to be growing the $5,000 by 5% in a day. That's $250 day one you'd be aiming for. So in an effort to grow your account, if you are someone who is a risk taker, so you want to be doing 3% trades. If you take 2 trades and they're not winning trades, you would have lost 6% of your account. So with that being said, I wouldn't risk 3% of my account if I'm someone with a goal of growing my account 5%. I would at most be risking 2%. If you are a 1%er, you can take up to 5 trades. If you are a moderate person, you can take 2 trades at 2%, 1 trade at 1%. If you're a 3%er, basically you can take 1 trade at 3%, 1 trade at 2%, because you don't want to exceed, you don't want to lose the money that you were actually trying to make. But then do you want to lose 5% of your account? No. So therefore, hold on a second. Go ahead. So therefore, what you would want to do instead is you would want to, no, I lost my train of thought. My baker is running around the house. Hold on a second. Give me 1 second, guys. I'm sorry. Sorry about that, guys. All right. So you need to know if I'm growing my account 5%, actually, I would say that if I take a 3% lesson, if I lose 3% of my account, I'm going to stop. So with that, that means I'm not taking 1% trades. I'm taking 3. And that's worst case scenario. Of course, the goal is to be growing the money, right? So does everybody understand what I'm saying so far? Is it a little confusing? Do I need to
It makes sense.
okay, awesome. Do I need to reword that for anyone else, or everybody's is good? Nini, Topi, Miss Laverne. Let's see. Okay, everybody's got it. Perfect. All right. So that's how you want to do it in terms of risk management. So you see, with $5,000, you're growing that by 2 to 5% a day. That's what you can do. But remember, when it comes to opening up an account, you decide how much money you want to trade with. So some people may not have $5,000. They may have $50, right? You want to observe the exact same rules. The exact same rules. And now some people may not be too happy about that because it's not going to look the same. Hold on. Okay. It's not going to look the same. So with $50, if you want to grow that by 5%, day one, you just need to make $2.50. Now, while $2.50 does not look like the $250 with a $5,000 account, it's still 2% that you would not have been able to do if you had put that $50 in a bank account, right? It's just having the skill and being able to navigate the markets and make money. You make that money. Next thing is you want to keep that money. So you keep it by following these rules and not getting overzealous. Oftentimes, when we see that we're making money, we may get excited and feel invincible. And then all of a sudden now it's like, oh, you know what? Oh, I'm not losing. I can't lose. Let me risk more. Let me double it. And that's when you're going to have your first loss. Then you're going to be mad at yourself. And then FOMO. No, I need to take another trade and I'm going to risk this much so I can get back what I lost and then go to the next level. But you lose that again. Now you find that instead of losing the 3%, because remember, you said the goal is to make 5%, but if I lose 3%, I'm going to stop. 10% later, you're not even realizing, all of a sudden, you've lost all your money because you couldn't observe a few simple rules. Figure out what your rules are and stick with it. Some people, they have the rule, okay, the goal is 5%. If I lose 3%, I'm going to stop. Another rule you can throw in there is, hey, I also will not be taking more than 3 trades, or I will not be taking more than 2 trades. For me personally, my rule is I don't want to be in more than 2 trades at one time. So once I have my stop loss where, there's a potential for me to lose money, I'm not going to be in more than 2 trades. Once I am in profit, if I've moved my stop loss up, so now it's more like a stop profit, so I can't lose money, then I can take another trade because I'm in a risk-free trade. Does that make sense?
Yes, it does.
Okay, awesome. Thank you, Dolphin. Because now I'm in a risk-free trade. I could have a trade going, Gus has trades that hit in take profit 99. So if I'm way, way, way in profit, I can take some other trade because, there's no losing anymore. Once I'm way above my entry price, if it's a buy, or way below if it's a sell, I can go ahead and take more trades. But once there's a risk of loss, I don't want to be in more than 2 trades. And that's my rule. Another rule I have for myself is to not trade when I'm feeling emotional. If I'm stressed about something, I don't want to be trading at that time either, because you have to have a clear head to avoid making silly mistakes. And none of us are immune, no matter how good of a trader you believe you are. There are people who do not really know how to trade, but because they have rules and they can just follow their rules, they are profitable in the markets. That's the bottom line. Does anybody have any questions? Topi, Shauna, Nini, Laverne, Haley, Dolphin, Bernie. Nobody has any questions. Everything is clear. Clear as crystal.
So this is great information. Now I need to just have it recorded, the recording played to me when I'm trading to remind me not to trade emotionally.
Okay, well, also I mentioned earlier that Trading in the Zone is a great book to buy. I don't know if you already have it, but you should read that book, Trading in the Zone by Mark Douglas.
Okay, great. Thank you.
Okay. And yeah, I have the playlist, Proper Risk Management, that you can check out this, and there are other videos on the same thing. So yes, so somebody who has a smaller account, say they're starting with $50, they're not starting with 5,000. An option is to start off with, say, binary options, right? Because the traditional style of trading, you're going to go 2%, 3%. That is a comfortable area to be. So with binary options, that's where you can make money in minutes, anywhere 1 to 5 minutes. You can make money like that. Miss Haley was playing with doing it in seconds. I like my heart rate to be normal, so I'm not doing that to myself, but definitely it's something that can be done. You can have a goal of growing your money 8% a day, doing that. Dolphin, you have used Relic? Relic is oh, okay. You have not used I'm a little bit okay. You have not used Relic. Will that help you reach your patient trading goals? Not using Relic? I'm confused. I'm confused. So the NFX app is what will give you the binary options. I don't know if you're mixing up Relic with NFX. Relic is for cryptocurrency. NFX is for binary options. So say you want to grow your money by 8% a day. That's something that's doable with binary options, and that's going to be allow you to raise the funds to eventually move over to the traditional forex. Yes, the NFX app is for binary options. So the same $50, you see, you can grow that to $5,000 in 60 days. You just need to make $4 day one. Now you have $54, $4.32 day two. Now you have $58, and so on and so on. Most times people will start with $100. So if you start with $100 in 2 months, you can have like $10,000 growing your money 8% using binary options. It's just that. So that's an option for people who don't have a lot of money to get started, because, you know, if you're growing your money 2%, 2% of $100 is $1. And while that is amazing, I think that's amazing. A lot of people are not going to find that amazing, because when you think about investing, you're not thinking about single digits. You're thinking about 5 and 6 figures and eventually 7 figures. But you have to start small. What's big was once small. And this is not a get rich quick scheme. Right? So that really is what I wanted to go over. Mr. Polite asked me to do that. He was here, but seems like he fell off. The connection over there for the network is bad sometimes, but luckily this is being live streamed to YouTube, so he can always go back and catch the replay. Everybody that's here, I believe you all are already subscribed to my YouTube channel, but those of you that are watching me for the first time, hi, welcome. My name is Alethea. Please go ahead and hit that subscribe and, like and share and watch all my content. I'm feeling really good right now. I'm up to 87 subscribers. Thank you so much. Nini, I saw that you subscribed, I think today. Thank you. I appreciate it. Yeah. Does anybody have any questions? Maybe I'll cover something else really quick if everybody is clear on this. All right, let me go to Trading View. Let's go to Trading View. Let me see, is anybody? Nope, nobody's here. All right. So okay. Let's hide this stuff. Let's get rid of these. All right, Trading View is a free site that anybody can use. Now there's a paid version. The paid version will give you some additional features. Thanks so much, Bernie, for dropping my link. Some people were asking me about my stochastic. So let me tell you about that. So I have it set on 14.3.3. All right. Why is it? Okay. Let's get rid of that. So you go to indicators, you can have all the things that you want saved. You can just star it and it's going to populate here. So you can type in stochastic and they're going to be different ones. But this is just the plain stochastic. If you star it, because there's a star, you just star it and then it will be in your favorites. So you'll always see it, right? So once you have that there, it's not going to look like this. So what you want to do, if you hover over the stochastic, you will see this gear looking thing for settings. Click on settings and the input that I have the K as 14, the length rather 14, the smoothing I have 3, and the D smoothing I have 3. 14.3.3. That's what I have as my inputs. Then for style, I have the K green, and if you notice, the candles that are bullish are green. So any green candles mean prices going up. So the K I have that as green as well. And then bullish candles are red. Red means going down. So the D I have red. Were you saying something, Miss Haley?
You said bullish are red.
All right. Bullish green, bearish red. Thank you.
Right.
Thank you. Thank you. All right. So red candles are going down, so that's bearish. So I have the D as red. And I got rid of the background. So if you see the background, I just uncheck that. If you notice, I don't have a lot of stuff going on my charts. I like it to just look as plain as possible, right? And then once you have that in, you don't do anything to visibility, right? Then you go to defaults, and you can save as default. So once you save it as default, you never have to do anything with it again. And then you hit OK, right? So that's how I have my stochastic being what it is. Now, let's take a deep dive into the stochastic and what we're actually looking at here. Remember, I said that green represents price going up. So whenever the green line is going up, it's above the red, we're looking for buys. And do you see, that's what we see here? That's what we see here, right? Green above, green is going up. Then when it crosses over and the red is on top, we're going down. We're going bearish. Red is to go down. So then I'm looking for sells. So when things are oversold at the bottom and then the green comes on top, I'm going to be looking to see if it's a good buy opportunity. When the red is on top and it's going down, I'm going to be looking for some sell opportunities. It's just as simple as that. Is everybody clear on that? Okay, maybe you don't have any questions now. You need to digest this. You can go back and rewatch it. But you can see it, right? You can see it. Red going down, green going up. You saw it, just a little teeny weeny. Sometimes it just stays above for a while. But this is a simple thing that you can use, and it's not too bad. If you see it, no questions. Okay, so that is the stochastic. 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 There. Okay. All right. So I guess this is straightforward. If there are no questions, and this was going to be a short one today, but thank you so much for being on. Okay, Miss Laverne, okay, no problem. And the rewatch is good for me because I need the watch hours. So yes, I encourage the rewatch. So if there are no more questions, I will first say goodbye to everyone out there in YouTube land. And again, I mentioned trading in the zone. The link is in my description box if anybody wants to purchase that. But thank you so much for tuning in. Like, subscribe, comment, share. Oh, Mr. Polite, you're over here on YouTube? Oh, okay. And Mr. Polite, you're the one that asked me to cover the proper risk management yet again. So I hope that you are able to get what you were looking for. All right. But goodbye for now. And I will see everyone next week, Sunday, same time, same place. Bye-bye.
Thanks for your consistency.
Thank you, Alicia.
Um, you're welcome, guys.